Hello, good morning, and welcome to another live technical analysis. Starting off with gold, we're seeing that the precious metal is remaining confined between the S1 and R1 support and resistance levels, respectively. The RSI indicator is running around the figure of 50, implying a neutral market sentiment. Narrowing of the Bollinger Bands, the smoothening of the moving averages, the 50 and 100 moving average in particular, all appear to be supporting the case for it to remain in a slightly sideways fashion. In terms of monetary policy, we're noting Minneapolis Fed President Kashkari, who yesterday implied that the Fed may have to keep rates higher for longer, which is something that we've been saying for roughly 5 months now, that the market's expectations of six rate cuts were over optimistic. They are now five. On a personal level, I would expect them to be around three or four this year. Therefore, some room to move with. If more Fed officials continue their hawkish rhetoric, we may see the dollar potentially gaining. Yet, the strength of the euro could be attributed to the comments made yesterday by ECB's Schnabel, which implied higher rates for a longer time period. And such, the markets may have taken that as slightly more hawkish than the comments made by Annapolis Fed President Kashkari. In terms of technical analysis, let's zoom in into the chart. We're on a 4-hour time frame as usual. We move on to the 15-minute. You can see that it's moving in a relatively upwards fashion, 30-minute as well. But we'd like to see the 4-hour. So from the 4-hour, it's bounced off our support level at 1.0725. If we round it up to this figure, so 1.0725, that would be our S1. So you've got S1 right there. Resistance at 1.07960. Then we could place R2 at 1.0890 big figure. So the beginning of this downwards motion. Now, despite the Bollinger Bands being tilted towards the downside, we noted yesterday that the RSI was moving from the 30 to the 40 figure. So it's now near 50. So despite this being a relatively tight boundary, I'd say, between S1 and R1, we could maintain a sideways bias in between the support and resistance levels. So you've got S1 and then you've got R1 at 1.07960. 1.0796, or we could play it at 1.095. So 1.095. There we go. So you've got S1 and R1. Now, I would maintain a neutral bias for the pair. So sideways between S1 and R1. But based on the fact that it's about 50, 60 pips in between, it could easily be broken in either direction. Now it's testing the mid-range of the Bollinger Bands. Even if it doesn't break above, it could stay in between S1 and R1. So given that it's very close to each other, we look for alternatives. Now, if it does break above R1, I would switch towards a bullish outlook. If it breaks below S1, I would switch towards a bearish outlook. But based on what we're seeing, they are fairly close, and this is a support and a resistance level potentially. So let's just place this in 1.0890. That would be R2, and then we've got R3 at this old high, 1.0890. Then we have R3, 1.0980. So that's R3, R2, and then you've got R1. Trend lines, I wouldn't draw an upwards moving trend line yet. We'd need two touches for a trend line and then for a third for it to be validated. Such, I'm not going to be placing one right now. Tight range between S1 and R1. Then you've got S2, which we should readjust. And we could take this previous low, but that would be, we're taking that previous low. And then we can try this SWIC. Appears to be equidistant as well between the support and resistance levels. So we've taken an older higher low, and then an older lower low. Support, support, moved higher, support, which was resistance turned to support, seen here. So we've got your support and resistance levels, 1.0620 for S2, and then for S3, 1.0515 for S3. So we've got S1, S2, S3, R1, R2, and R3. So sideways as long as it remains between S1 and R1, but once again, they're very close to each other. So even if I did maintain a sideways bias, it would not be for long. Uh, at the most, perhaps at the end of this day. If it stays in between S1 and R1, that would be all right, but still fairly close to each other. So it could easily break above R1 or below S1. Therefore, we have R2, R3, S2, and S3 as potential targets should it break below S1 or break above R1. Dollar against the Japanese yen. As you can see, it's failed to break above R1, staying in between S1 and R1. Now we have about $2 difference, so that's okay. Staying once again sideways, RSI at 50. Neutral market sentiment. So between S1 and R1, plenty of room to play within. Upwards moving trend line, not yet. Neither would we say this is a double top or triple top either. Let's actually look at the CCI as well. Corrected. It's moving a relatively sideways fashion, so you can see corrected here. See this is valid, moved lower, stayed in between, came back up, lower, came back up. I'm looking at the range of minus 100 to 100. So if it is moving in a predominantly sideways fashion, we could use the CCI. So if it comes below the minus 100, that could mean it's due correction to slightly higher. So at this point, came lower, moving slightly higher now, so staying in between S1 and R1, but wouldn't say slightly far-fetched. Failed to break above R1, CCI also above 100, so corrected perhaps lower. But I wouldn't use the CCI for the USD It's a bit too arbitrary. I'd stick to support and resistance for this particular pair. So sideways, as long as it continues to validate. British pound, perhaps the comments made at 10:40 GMT plus 2, predominantly hawkish, buying rate cuts, not really that much of a chance, at least for now. Predominantly hawkish in nature, so we may be seeing some strength from the British pound, but since it's broken above R1, we switch for a bullish outlook, no in terms of RSI, also moving up in an upwards range. Next target would be R2, which is now R1 at this high here. So I would expect it to actually move up, try to test resistance if the bulls have taken over the pair. If not, failing to break above R1 or staying between S1 and R1. 1.275, 1.2760. That would, let's just switch this one. I've got S2 1.2445, and I've got S3 at 1.2310. I've got resistance at 1.2760. Now, one could argue that I could bring my resistance level much lower, but it's entered this sideways channel that we keep on mentioning. So it could actually just continue moving in a relatively sideways fashion, staying between S1 and R1. But thus, I'm keeping my R1 at a higher level. because it could still continue to move in between this range that was predefined by a sideways moving channel. So for a bullish outlook to continue, it would have to break above R1. If it does not, sideways bias. If not, if it breaks below S1, bearish. 2760. Then this is R2. And now we need to find R3. Let's go back. Lower high. Too close to R2. So we're taking this point here where it found resistance, failed to break above, and then moved lower. So this resistance would be at 1.2990 for R3. So we've got R2, R1. This one is 2 and S3. So bullish outlook would have to break above R1. Otherwise, staying between S1 and R1 would be valid for a sideways fashion. But once again, note the difference between S1 and R1 is pretty big. So some room to play within as well. In terms of oil, so oil continues to validate our support and resistance levels, and we could actually just bring S1 slightly higher, 71.55. 71.55. Now, in terms of oil, API weekly crude oil inventories indicated an increase in inventories, yet it was lower than expected, so implying that there is still demand for oil. Such may have boosted oil prices. Now, in terms of geopolitics, we could argue that the possibility of a ceasefire deal between Israel and Hamas could alleviate pressures in the region, and thus uh, potential resumption of oil trade could lower prices because there's less tensions. Yet we also note the Houthi rebels still exist in the region. So even if they do reach an agreement, you still have another actor potentially keeping oil prices elevated. So we've got R1, R2, R3, RSI, 50, sideways bias between S1 and R1, narrowing of the Bollinger Bands. Now, I would note the crossover between the 150 moving average could be a bullish signal, but based on the fundamentals and the technicals, excluding the moving averages, sideways between S1 and R1. But if it does manage to break R1, I would immediately switch towards a bullish outlook, aiming for R2. If it does not, sideways between S1 and R1. For now, I don't really see it. I don't really see a bearish outlook being possible, but in the event that I am wrong, it would have to break below S1 and aim for S2 at 67.0. We've talked about gold. Now, gold, we could also add a few fundamentals from the US. Now, despite not offering um, one of the particular banks that have been in the news recently, it could spill over into Europe. It could create a crisis in the banking sector as well. The overexposure of banks to, I'd say, loans is concerning. Once again, if that matter escalates and we see a repeat of what happened last year in March, where there was a banking, well, a mini banking crisis, so lack of confidence in the banking sector, we could see safe haven inflows into the precious metal, which could potentially aid gold's price, breaking above R1 and then aiming for R2. For now, we said sideways between S1 and R1, bearish outlook, breaking below S1 and aiming for S2. Our favorite airline manufacturer, Boeing. the bad news don't seem to stop. According to an NTSB report, so the National Transportation Safety Board for the US, the bolts and screws that were meant to be put in place in the Alaska Airlines flight to keep the panel secure in place did not exist. I need to read that report slightly more to have a better picture, but based on what various news outlets have been reporting, I would be bearish for the company stock price. If you are forgetting to put bolts and screws on airplanes and then things start flying off, that's a problem, which could weigh further on the company stock price. Now, this could have been a triple bottom, but from a fundamental point of view, I would be bearish on the company stock price. Now, the question also arises, was this only for the Boeing 737 MAX 9 series, or are there more impacted planes? That remains to be seen. And based on what we have seen, I would not believe that to be improbable that other planes that they may have manufactured could have similar problems. Such, from a fundamental point of view, I would be bearish for the company stock price. Found some support at 200.45, so for a bearish outlook to continue, would have to break below S1. Next target being S2, 176.60. Then you got S3 at 158.35. So, fundamental point of view, bearish outlook on Boeing. It, the news just keep on coming, and they appear to be bad every day, despite the RSI being at 50. So, sideways between S1 and R1. I would not be surprised if it breaks below S1, takes aim for 176.60. We could also look at Airbus, created a high. Still, if we look at a weekly chart, moving higher, monthly moving higher once again. So as the troubles with Boeing continue, from a fundamental point of view, you could be potentially could see Airbus's stock price moving higher, given that there are the two main competitors. So if people stop buying Boeing's airplanes, so airlines, then they might switch over to Airbus, which could potentially support the company's stock price. We're going to be looking at the New Zealand dollar as well. They had their employment data yesterday, better than expected, so providing some support for the New Zealand dollar. Now let's just readjust, taking the recent price action. We're removing this 0.6050. That would be my S1. RSI 50, better than expected employment data. Potential gains might be mitigated from a hawkish Fed. But overall, I would maintain between these particular levels, once again, a sideways fashion, a narrowing of the Bollinger Bands, but from a more macro perspective, perhaps bullish for the New Zealand dollar or the Kiwi. So, based on the fact that it's broken above R1, so we've placed this one here. R1 was around this point, simply readjusting a bit lower. We need a new resistance level R3, so I'm taking this previous high. Once again, support and resistance work with highs. You've seen significant resistance at this point. It's failed to break above it on numerous occasions, and then it moved lower. Same here. You've got two attempts, then you've got a third and potentially a fourth. So this could be a valid resistance level. 0.6365. Now, in terms of charting, a sideways moving channel, but it would have started from here. Starting here, you've got one and a second touch. I'd like to see the pair failing to break above R1 and staying between S1 and R1 for a sideways bias. For now, slightly bullish on the New Zealand dollar based on the employment data. Let's just adjust R3. So this becomes R1. And then for R2, 0.6255. Then we've got S1, S2, and then S3. You can have a look, perhaps take a screenshot Reflect these on your charts and see how it moves. Perhaps it validates or stays in between S1 and R1. UBS. Now, we said yesterday that the reinstatement of the dividends and earnings per share may have provided some support for the company's stock price. It appears that I was wrong. The RSI is at 30, so it appears the fact that the company's revenue was lower than expected, so essentially worse. First half predominated the market sentiment and has moved lower, breaking below RS1 and now taking aim for S2. So, from a technical point of view, bearish on UBS's stock price. Simply switching this from S1 to R1. Aim at S2, 27.26. Turn this to red. R2, 30.25. Note that it's created a breakaway gap, so this might be filled at some point in the future. Then we've got R3, 31.33. Now for S3, perhaps at this old high, but we'll have a look in just a minute. Validated here. So we had an old high, managed to break above, found support, and moved higher. So 25.20, so 25.20, that would be my S3. Just switch these. S2 becomes S1, S3 becomes S2. $25.20. We're going to be noting this gap that was formed for future reference. Shapes, insert shapes. Rectangle, we're taking the candle of this, bullish candle, and where the wick opened for the bearish candle. Let's make this as slightly lighter. So this gap might be filled at some point in the future. I'm still keeping R1 at 29.0 for resistance. Just noting this gap, just in case it gets filled. Side 30, bearish market sentiment. Bearish outlook to continue would have to break below S1. Take aim for S2. Australian dollar. Yesterday may have found some support. So the measures by China might be alleviating some concerns for China's economic resiliency. Let's bring S1 slightly lower. 0.6480. But actually, before we continue, let's go to the loonie. Now, for the loonie, it's broken below our upwards moving trend line, sideways fashion between S1 and R1, or Psi 50, implying a neutral market sentiment. What is interesting is the BOC's meeting minutes, which are due to be released later on today. So should they imply that the bank may have to remain slightly more hawkish or keep rates higher for a longer time period? Could provide some support for the Canadian dollar. Take aim for S1. Perhaps next target being S2, 1.3320. Lastly, we've got S3 at 1.3180. Now, if it's predominantly dovish in nature, the dollar may gain, breaking above R1, taking aim for R2. Moving back to the Aussie. Let's bring our resistance level slightly lower. Once again, 0.660 for R1. R3 becomes R2. And then we need new R3. Broke below, came back up, failed to break it again, moved lower, resistance level. I think that makes sense. It tried on 2 occasions, well, 3, to break above this resistance level. Did not, moved lower. So accumulation of sell orders, heavy volume, potentially heavy volume. We actually need to check that. Moved lower. Let's insert volumes. See, increasing. No sell volume yet. Failed to break above. Decline in volume here. And validated by this. Overall, we're seeing volume being slightly reduced, so low market volatility, sideways bias between S1 and R1, 0.6480. So for this, based on volume and the technicals, sideways bias between S1 and R1. We could even place at 0.6475. So we've got R1, R2, R3, S1, S2, and S3. Broken above the mid-range of the Bollinger Bands, sideways between S1 and R1, as we said. Perhaps the Aussie may have gained some support following the comments made by the Chinese government, potentially restoring some confidence in the Chinese stock market. And because of their close economic ties, the Aussie might be potentially gaining. Now, the loonie might have also gained due to oil, which moves slightly higher. So you can see there is a correlation. So it should all go up. The loonie might also gain, but more emphasis on the meeting minutes due to release later on today. In terms of other companies, Tesla formed a gap. Note how it tested our support. So it gapped below S1 and actually below S2. Came back up, tested that this was support, turned resistance, validated support at S3. Now we need to figure out where we're placing our support levels. So let's just turn this support and resistance, support and resistance. Move this higher. Taking this previous low, leaving enough space because it gapped below S1 and R1. So just in case it manages to come above, you have R3 at a safer distance. 229.95. And then for support, let's see this old low. And we're just giving it more space based on what we saw. Old higher low. I'm ignoring some of the price action as it's far too close to the current price action. So I placed it here, too close to S1, was validated here more recently. So when I say recently, I mean last year, 28th of April. And then old lower low. Turn this to green. 152.65. 126.65. That's S3. So let's just edit that 126. RSI 30, bearish market tendencies. 152.65. 175.80. 195.65. We'll do gold in just a moment. We covered it before, but since you've asked, we can have a look at it again. Just finishing off with the resistance labels for Tesla. Bearish outlook for Tesla, aiming for S1, has to break and move towards S2. Back to gold. Look at gold, you've got S1 at 2039, excuse me, S1 at 2013, R1 at 2039. Note the average, the moving averages, so the 50 and 100 have smoothened out, so no market volatility. RSI also 50, so you've got two indicators implying a slightly sideways fashion. It tested R1, it failed to break above R1. It's still validating a relatively upwards moving trend line, but I wouldn't be bullish on gold just yet. For now, the fact that it's failed to break above R1 could mean that it's found some selling pressure and could stay between 2013, and 2039. So between S1 and R1. You could see potentially a small market correction to the trend line, or perhaps slightly lower to S1. And you could stay in between this range, so the sideways moving channel. Now, if we do see geopolitical risks increasing, that could provide support for gold. If we also see more banks reporting high exposure to loans, the the current bank that's in the news, that could funnel safe haven inflows into gold. So from a fundamental point of view, if you would believe that there is a risk, perhaps the banking sector, gold could potentially move higher should it receive safe haven inflows. And so about Community Bank Corp. So that's an interesting story that we continue to monitor. If you look at the Fed's senior loan survey that was released, if I'm not mistaken, on Monday, you can see that the credit conditions have tightened. So that is concerning. For now, however, it's validated the mid-range, which also coincides with R1. You can stay between S1 and R1. If it breaks above R1, I would switch in favor for a bullish outlook, aiming for R2, 2075. Then for R3, 2135, which is near the all-time high figure. For now, though, appears to be moving between S1 and R1, which is $20 approximately, which is a fair range. Upwards moving trend line hasn't been violated yet. Would not be surprised if it moves back down to this level here, stays in between S1 and R1. But once again, if we see geopolitical risks increasing, or if we see more banks potentially being downgraded to junk in terms of their credit rating, then you could see safe haven inflows into gold and the Japanese yen. For now, between S1 and R1, but we should closely monitor potential developments in the US banking sector and overall in terms of geopolitical risk. I hope that's okay in terms of an analysis. Technical standpoint, narrowing RSI, upwards moving trend line, smoothing of the moving averages between S1 and R1 for today. We'll have to look at it tomorrow as well to see if that continues. Boeing, as I've said, bearish outlook breaking below S1 would have to, then aiming for S2 potentially. From a fundamental point of view, the news about Boeing is pretty bad. The British pound finding support at 1.260. British outlook to continue would have to break above R1. If it comes back down to test support once again and moves higher, would validate this completely as a support level. Let's see. I like looking at ExxonMobil. Anything interesting? BP, nice earnings. Touched nicely on R1. 485.15. 70 bullish market tendencies. If it comes back down to S1 and then continues moving higher, I would not be surprised. We've done UBS. We've done the New Zealand dollar. So the employment data came in better than expected. May have supported the Kiwi. And let's see, dollar CAD we've done. British pound. If the dollar does strengthen, could see the Nasdaq 500, which is actually testing. It's on R1. We've got R1 and S1. Dow Jones 30 paints a different picture though. Might be moving lower, aiming for S1. Nasdaq. I would note there are some concerns that there is sort of a tech bubble. Would be interesting to see the Nasdaq 100 as well, how it will fare out the coming months. Nvidia still aiming for R1 713.40, S1 613.10, S2 504.30. As we said, above 70 might be overbought and due a market correction, perhaps down to S1, staying between S1 and R1 before moving higher. And lastly, let's just look at ExxonMobil. So it's nice stock. Support, or you could place this one. $101.50. There's two. Found support. 96.40. Resistance could be taken at this swing high, but fairly close to S1, 104.78. Then we could bring R2, 109.10. Then you've got R3, old high, 113.55. And then lastly for S3, I placed my S3 at the beginning of this gap, which was filled, but actually perhaps slightly lower, $89. So I've got S1, S2, S3. For now, bullish outlook for the company stock price, despite going back down. This could have been a market correction before continuing on its ascent. And with that, that does it for today. Thank you for watching, and I'll see you tomorrow.
My name is Emily. In today's session, we will look at news trading on economic releases. This trading strategy is appealing to many short-term forex traders. As markets move because of news, the release of economic data is often the most important catalyst for short-term movements. Basically, this trading strategy involves trading around significant forex news events, such as key economic releases from the countries whose national currencies consist of the major currency pairs. Because of the strong influence on a currency's valuation, a forex trader can take advantage of an important news release to potentially benefit from those fluctuations. There are 8 major currencies available for trading, so there is always a piece of economic data scheduled for release that forex traders can use to make informed trades. 7 or more pieces of data are released almost each weekday, except from holidays, from the 8 major most followed countries. Therefore, for traders who choose to trade news, there are lots of opportunities. As the US dollar is on the other side of 90% of all currency trades, US economic releases tend to have the most noticeable impact on forex markets. If you want to trade news successfully in the forex market, you need to know when reports are expected and understand which releases are most important under the economic conditions at the time. Generally, the most important information relates to changes in interest rates, inflation, and economic growth, like retail sales, manufacturing, and industrial production. To sum up, it's important to do your research and stay on top of economic news in order to reap the rewards. Thank you so much for watching us today, guys. Bye-bye.
Okay, let's go ahead and get started. So welcome to this week's webinar. Today we're going to be talking about the last part of our Fibonacci series, which will be on projections. So as per usual, before we get started, a risk warning. So our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay. I'm Melanie. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. And I will be your speaker for today. So here's today's agenda. We'll do a brief recap on a Fibonacci retracement, the ideal market structure, and then we're going to look at the different Fibonacci retracement levels, and then we'll dive into this week's topic, which is on Fibonacci projections, and then we'll look at how we combine what we learned from the previous weeks and what we're going to be learning today on Fibonacci projections. Okay. And if we have time at the end, we'll also be looking at some charts. So if you have any requests, feel free to pop them into the chat. Also, if you have any questions throughout the webinar, feel free to let me know as well. Okay, let's get started. So here's a simple checklist to follow when first starting out with Fibonacci retracements and some things that you can look out for. So firstly is the market structure curve. So you want to be looking for big zigzags, and we'll show you examples in the coming slides. Next, we're looking at how we can identify the recent trend. So are prices going down or up? And our typical advice is to always follow the general trend. Next, identify a recent major swing low and recent major swing high. So we'll show you examples, but basically you want to look for the most significant swings when you are deciding which charts to use. Next, you want to connect the two extreme points, the highest to lowest, if you are looking at a downtrend, and the lowest to highest if you're looking at an uptrend, like you see here in this image. Okay, so let's first look at an incorrect example. So here's an example of an insignificant swing, which are typically bad points to use for Fibonacci starting and ending points. Price movements here are too small and there are no significant swing highs or swing lows. So you can see we're drawing out the shape, and this is the kind of shape that you want to avoid. Here's another incorrect example. You can see there isn't really any clear shape, even though you can see that the general trend is downwards, but there's no clear swing highs or lows. Price movement is also pretty small. Okay. Okay, now let's look at some correct examples or things that you should be looking out for. So here's an example of significant swings. You can see that there is a clear move up and down with obvious peaks and troughs, and also there are clear market movements. Okay, here's another example. So I've drawn out the peaks and troughs to point out exactly how clear your market structure should look like. Okay. Okay, next point, we want to make sure that you are following the market structure. Okay, here is an example of how not to draw your Fibonacci retracement trend line. So your Fibonacci trend line must follow price structure clearly. In this case, you can see that there is a zigzag market structure. The retracement drawn here cuts through the market structure, making it less effective. So when drawing your trend line, you want to follow price movement and not deviate from it too much. Okay, so something like this, you want to pick market structures with clear upward or downward movement and something that follows price movement. This works better on higher time frames, as there tends to be less noise. So higher time frames could be one hour to 1 hour, 4 hours, 1 day, 1 week as well. Okay, so here's an example again of a clear market structure. So Fib tracements can be used in both choppy and trending markets, but it is important to look for clear market structures. Okay, so if you look here, there's a lot of upward and downward movements. So that's what we mean by choppy and trending markets. But the main point is to make sure that your market structure is clear. So here's an example of an unclear market structure. So once again, it is choppy with a significant drop here, significant highs here, but you can see there isn't really a clear market structure. Okay. Okay. Now, these are the Fibonacci numbers that we typically use. So if you've been here for our previous Fibonacci webinars, this will look familiar. But basically, this shows you how you draw your Fibonacci retracement trend line and also the different types of levels, ranging from the negatives to levels that are greater than 100. So the tool that's used is a Fibonacci retracement tool. but it can lead you to three types of Fibonacci techniques. So previously we talked about the expansions, which are the negatives, the mid-range, so 23.6 to 78.6. Those are called the retracements, and those greater than 100% are the extensions. So we went through these in our previous webinars, but if you'd like me to briefly go through them again, feel free to let me know in the chat. Okay, so here you can see all the different Fib numbers that we mentioned in the previous slide and how it looks like on a chart. So just to recap again, mid-range is retracements, negatives are the expansions, and 100% are, or greater than 100% are the extensions. And in all of these scenarios, we are only using one tool, which is the Fibonacci retracement. Yeah, I think it is recording. I think they might publish this webinar on YouTube as well, so you can go ahead and check it out. But if it's not on YouTube by I think the end of next week, you can email IronFX and they'll help you out there. Okay, so let's move on to this week's topic, which is the Fibonacci projection tool. Yeah, you can find me on LinkedIn. I'll pop it into the chat in a little bit. Oh yes, I also wanted to share with you guys this website. So if you're new, when it comes to Fibonacci's, okay, you can go on to the forexarmy.com and it shares exactly how to draw Fibonacci retracements, and watch a bunch of videos, extensions, and it shows you an in-depth instructions on what to look out for. So you can see that we recently talked about the unclear market structure, and now this shows you an unclear market structure from an M15 view can actually look clear on an H1 view as well. Yeah. So this area here that we've highlighted is the market structure that was on the M15 view. And yeah, so just because it looks unclear on one time frame doesn't mean that it's not usable. So yeah, you can feel free to pop this to check this out after our webinar. Okay. Yeah, so let's get back to our slides. Yes, so we're talking about Fibonacci projections. So for Fibonacci projection, this uses 3 points. We have a starting point, a middle point, and ending point. So yeah, it's not to be confused with what we talked about previously, which was the Fibonacci retracement, which only uses 2 points. So here we use namely the 61.8, 78.6, and 100% levels. And you want to make sure that you look out for this flash or lightning bolt shape that you see in the GIF here. Okay, let's look at a couple of examples of this. So here's a simple example. You can see clearly the starting, middle, and ending points follow the swing highs and lows of the price structure. So I don't know if you can see the lightning bolt shape, but following the arrows, the green arrows, and then you extend the tail out from the last point towards the ending. So basically where it ends, we're projecting a rebound off of that level. So over here, you can see the rebound occurs at what a 100% Fibonacci projection level. Here's another example with a very obvious zigzag shape again. So yeah, we've drawn out what exactly you should look out for. So you want to take note of the Fibonacci trend line following the market structure closely again, and we're projecting the price to reach this 78.6% Fibonacci extension, so that we can see it rebound off of this level. Okay, so let's see how this plays out. And yeah, so you can see that price bounces off this level just as we expected. Okay, maybe I'll just pop the link for the Forex Army website in the chat first. Okay, and yeah. Okay, so here's another example. So we want to take note of this zigzag shape once again. This time we see it inverted. Okay, but it's still the same concept. So the starting point would be here, middle point, and ending point. And we're projecting where prices will bounce off of in the future. In this case, if you have the 78.6, 61.8 levels shown here, you can see that price has already broken out of these levels, and that's the reason why we're projecting it towards 100%. Okay, so let's see how this plays out again. Okay, so you can see price reversed off of the 100% level nicely. Okay, so you can also draw invalid Fibonacci levels. In this case, we're talking about invalid Fibonacci retracement levels, and because this tends to be more common than a Fibonacci projection level. But one of the most common scenarios of this is when price makes a lower low. Assuming you are drawing a Fibonacci retracement from the top to the bottom, then yeah, it will make sense for you to make for price to make a lower low. I'll show you an example in the next slide. But if there are bars on the right that break your ending point, it becomes invalid. There are Fibonacci retracements that are negative. Previously we talked about Fibonacci expansions that are minus 27 and minus 61.8. So even though those break below the 0% level, those are still considered valid. And I'll touch on those in a little bit. But this is the example of an invalid retracement. So price has already broken below the 0%, right? And that you see over here with the arrow. So price breaks our ending point on the right, and hence we cannot use this ending point as our retracement. So you want to always remember to pick the lowest point with nothing on the right of the ending point. Okay, now let's look at how we can combine all of the retracements and the projections that we've learned so far. Okay, I'll give you guys an example of um buying. So if it's the other way around, so if your starting point was here, ending point here, then it would be an invalid retracement if price breaks above that 0%. So basically, as long as it doesn't break below this 0%, then you're good to go. But we'll look more into this when we look at the charts. Okay, so let's talk a bit about Fibonacci confluence. So Fibonacci confluence is basically when you combine multiple Fibonacci retracement levels together so that you can increase the probability of your Fibonacci levels working versus a single Fibonacci level working. So it's basically combining all of your Fibonacci retracements, but also with your projection that we just learned. So in this example here, we have three different Fibonacci methods here. So firstly, we have the minus 27% Fibonacci expansion, which is indicated by the red arrow. That lines up with the 161.8 Fibonacci extension, indicated by the gray arrow. So for extensions, we look for a Nike tick. So this would be the shorter part of the tick, and the tail of the tick would be this black arrow here. And then we have a 78.6% Fibonacci projection. So you can see all of these levels line up closely, giving you a confluence area. So most of the time for confluence areas, we're looking for an area, like a small area, not so much a specific level. So it's okay if your levels deviate from each other by a little bit. Okay, so you can see price bounced off the Fibonacci confluence area over here. Okay, in this example, we have two Fibonacci methods. We have the Fibonacci extension, which is the Nike tick method. And this is the 127.2% Fibonacci extension level, and it's in line with the 61.8 Fibonacci projection level. Okay, take note of the flash shape again. And for the Nike tick, can see that it's an inverted V shape, but it's only valid once the tail exceeds past this 100% level here. Okay, and then we can see price bouncing off of this confluence area here. Similarly, here we have the same two Fibonacci methods, extension and projection. Here the 127.2% Fibonacci extension. So the Nike tick would be starting point here, ending point here, and then the tail is here. And that is in line with a 100% Fibonacci projection. So your starting point would be here, middle here, and ending point here. And you can kind of see the lightning bolt shape as well. Okay, so that all lines up in this area here to give you a reversal because of the strong resistance level. Okay, next, in this example, we use a 61.8% Fibonacci retracement that's in line with a 100% Fibonacci projection to give us a strong confluence area over here, where price has bounced off of. Okay, I think by now you kind of get the idea. It's basically just finding a bunch of levels that line up to form a stronger resistance or support level. So in this example, the minus 27.2% Fibonacci expansion, which is in blue, lines up with the 127.2% Fibonacci extension, which is in purple. This is also the inverted Nike tick. So the head would be here, or rather the shorter part of the tick is here, and then the tail is here. That all lines up with a 100% Fibonacci projection to give a strong confluence area below here. Okay, so for Fibonacci expansions, if you were here for our previous webinars on expansions, you will know that for expansions, we're looking for a flash shape or zigzag or lightning bolt shape. So that's really similar to what we look for when we want to use a Fibonacci projection that we're talking about today. So typically, you would be able to use the Fibonacci expansion and the projection together. And how that would look like would be something like this, just without the purple arrow. So for an expansion, you would take the starting point and the ending point to be the first line of your lightning bolt shape. And then your projection would be the V shape that follows that same shape. Okay, I hope I'm making sense, but you can kind of just see it over here on the chart. Okay. Um, okay, so in this example, we have a swing low support over here and one long-term 100% Fibonacci projection that is in line with another short-term 61.8 Fibonacci projection. So that makes a strong confluence area over here where price bounced off at 81.084. Okay, so you can see price bounced off after this 61.8% Fibonacci projection line up with another Fibonacci projection. Okay, so following our Fibonacci techniques, trade management is also super important. So what we typically recommend is to place your stop loss beyond your key confluence area and your take profit before it. So for stop loss, the reason to place your stop loss beyond it is because more often than not, price is attracted to such strong areas of Fibonacci confluence. So if your stop loss is right before instead of beyond that confluence area, you'll most likely get stopped out before the market reverses. So that's also one of the reasons why people wonder why they got stopped out right when the market starts to reverse and then complain about stop hunting. So for take profit, we recommend to place your take profit before a key Fibonacci confluence area because there is a high chance that it won't be able to go beyond that level. So instead of reaching your profit target, it reverses back to your entry or even worse, your stop loss. And that's why people complain that the market is being manipulated because they might miss their take profit by 1 or 2 pips. So you can see in the example I've included over here exactly how you should place it if you are going in for a buy entry. So the opposite, if you're going for a sell entry, it will just be the opposite. Okay, now let me pull up my charts and then we can take a look at some live analysis. Okay, feel free to let me know in the chat if you guys have any requests for any charts that you'd like me to go through. Okay, let's go ahead and maybe we'll start off by looking at gold first. Okay. So let's start off by looking at the higher time frames first so that we get an idea of what the general trend is. So on the weekly time frame, we can see price moving upwards. Okay, so we start off by looking for any trend lines or trend channels. I don't think we have a trend channel here. Okay, actually we do. So what makes a valid trend channel is if there are at least two touches at the top and at the bottom of the channel. Okay, so we have an upward trend here. If we look at our daily time frame now, okay, you can also see that um it's moving in an uptrend as well, also in an ascending trend channel. Okay, so let's add some support and resistance levels here. Okay, so here would be my first support and my first resistance here. So I typically will try and look to see if I can pull it back as far as possible so that we can see how significant that level is. Because the more times price has tested that level, the more likely it is to reverse off of it again. Okay, so this would be my second support. And then my second resistance would just be at this week high. Okay, let's look at our 4-hour time frame. So on our 4-hour time frame, we can see that price recently broke out of this ascending trend line, or descending trend line, sorry. Okay, so that gives us a bullish signal, especially because our daily and weekly time frames all gave us bullish signals as well. Okay, this was my first resistance, and then my second resistance is here. Um, I will place my first support here because we have two swing lows. You can see price testing it a lot, but it's cutting too many candlesticks here. So it's not a good support level to use. Okay, I'm gonna place a intermediate level here. And my first support would be here. Okay. So now we can go in with our Fibonacci levels. Starting off, I can see that we have a Nike tick shape here. Okay. So I'm gonna use Fibonacci retracement. So for retracements, we use the 100% levels. So 127.2, 161.8. And you can see that price is currently testing that 127.2 in line with the first resistance, and the 161.8 is also in line with our second resistance. Okay, and for our projection, you can see this lightning bolt shape. So I'm gonna use this trend-based fib extension. That's what they call it on TradingView, but I think if you're using MT4, they call it something else, but it's the same shape, the same symbol. Okay. And we use 61.8, 78.6, and 100%. Okay, so this 78.6 lines up nicely with my intermediate resistance, and 100% also lines up with my first resistance. So I'm just going to keep those two. Then earlier I mentioned that typically if you can find a lightning bolt shape for your projection, you can use it for expansion as well. So for your expansions, we're looking at the negative numbers. So and you can see that they line up nicely as well. Okay. Okay, I'm gonna look for a retracement from here to here. For retracement, we look at the mid-range levels. Okay, so we can see the 61.8 lines up with, lines up with the intermediate level, and the 78.6 lines up with my first resistance. So I'm just gonna keep those two levels. Okay. So we can see we have three levels lining up over here. Actually, we have four levels lining up here. Okay, at our first resistance. So that area is likely to attract price. And it also goes back pretty far. So that's why when we're looking for levels, we want to push it back as far as we can without cutting too many candlesticks. Okay. Yeah, so we're seeing price testing our intermediate level now because it does have two levels lining up with it. So it is a confluence area, but it's not as strong as the first resistance. So we'll likely see it break above this level and head towards our first resistance. So now let's support this analysis by using some indicators. So I like to use Ichimoku and MACD because at one glance you can see exactly what the signals are. So price is moving above the Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal, so it also supports our analysis. And let's look at RSI and stochastic. Okay, RSI is also moving in an ascending trend line. Okay, but stochastic isn't telling us much. Now let's look at Bollinger Bands. Okay, you can see price pushing above the upper band. So it is also giving us a bullish signal here. Okay. I think there was a question about if it is an uptrend. If you'd like the recording, I think it will be better if you email IronFX, and they will probably send it over to you after this webinar. Because I don't have access to the recordings. Yep, so there was a question, if you're buying, will you trace from lowest price movement bottom to top? So if you're looking at a retracement, you would look like you would probably do something like that. And then retracement would be the mid-range. So we're looking at these levels. So yeah, bottom to top. So your 0% would still be at the top and 100% below. Okay. Do you guys have any requests for any charts you'd like me to go through? I think we have time for one more chart. Okay. Let's go ahead and look at um let's look at DXY. Actually, let's look at AUD. Okay, so on our weekly time frame again, you can see prices dropping. Okay, we see prices moving in this descending trend line. Okay, on a daily time frame, mm, on the daily time frame, there isn't really any trend channels or trend lines, but it is, I wouldn't say it's a downtrend either. It's kind of ranging. Okay, so let's just go ahead and add some levels. So this is my first support. Then my first resistance will be here. And then I just place my second support somewhere here. And then of course at this swing high, that would be my second resistance. Okay, now let's look at our 4-hour time frame. Prices are also really kind of ranging as well. In fact, let's see if, okay, no, there's no trend channel. Okay, so we have a support level here, and let's see if I can pull it further back. Okay, no. So this is my first support, and you can see that it's an overlap support, which basically means that there are swing highs and swing lows that line up with that level. Okay, and then my first resistance would be here. Okay, this would be my second resistance, and my second support would just be here. Okay, I think you can see price moving within this channel here. I think we would continue to see price kind of testing this area. But let's just do some analysis anyway. Okay, so starting off, I'm gonna look for a retracement. So I can see that price lines up, or rather this first resistance lines up with the 23.6. Yeah, I think the 38.2 as well. Okay. Okay, we don't have any projections. I think that's all the levels that we have. Oh, okay. So if we zoom out, we also have this retracement here. Okay, so um my 61.8 lines up with my first support, 78.6 lines up with my second support, and yeah, so even though this 38.2 lines up with the second resistance, we can't use it because price has already broken out of that level. Same goes for this 50%. So we can only keep our 61 and 78. Okay. Okay, and my 61 also lines up with my second support. Okay, now let's look at our indicators. So price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD is also giving us a bearish signal. Okay, so you might want to go for a sell from where price is at now to our first support. Since there is quite a bit of resistance at this level here. Okay, because we have two swing lows here, and can see price testing that same level with the 61.8 as well. Let's look at RSI. Okay, not much. Let's look at moving average as well. So moving average, what I like to look for when using that is looking for any of these crossovers. So crossover basically means that there is a change in trend. So over here, we could see price moving upwards. The minute we see price crossover, that's a signal that the trend is going to change, and then we saw price drop after that. So we could be seeing price continue to drop as well, or until it crosses over again. Okay. So yeah. Okay. Let me know if you guys have any questions. If it's all good, I think someone requested for my LinkedIn, so I'll pop that into the chat now. And yeah, if there's no questions, that's all the time we have for today. I hope you guys found it helpful, and I will see you guys next week. Thanks, everyone. Bye. Bye.